At Silicon Valley Bank, we deal in innovation. We work with the entrepreneurs, companies, and investors that are defining what comes next. This means we have the coolest clients of any bank, anywhere. Our clients invent the future. And that inspires us to do everything we can to bring their ideas to life and make their businesses successful. As our clients strive to bring about new innovations, the next big thing, we help them move their bold ideas forward fast, no matter where they are in the world or how large they become. We work with companies and individuals in technology, healthcare, energy, venture capital, private equity, and premium wine. That's it. That's all we do. And our clients' needs demand an innovative approach to financial services. Our credit, cash management, investment, and international banking services are designed to make life and business easier for all our clients. And we're much more than just a bank. We write company valuations, manage venture funds, and offer assistance to companies that are expanding into offshore markets. We make connections with potential business partners, and we advocate for the innovation sector with policymakers. Our dedication to our clients is also reflected in our employees' dedication to their communities. We volunteer, fundraise, and make corporate donations to causes our employees and clients believe in. As you can see, we're not a typical bank. Silicon Valley Bank is making next happen now.
Hi, everyone. Boa tarde. Good afternoon. My name is Julia Figueiredo. I'm the director for Latin America at Partners for Growth, PFG. And today I have the pleasure to moderate a panel with Silicon Valley Bank, Kamino, and Flourish Ventures. So I would like to invite the speakers to maybe turn on the camera so we can start the panel. If you have any questions, please put on the chat. We will go through a few broader and overview questions, but if you have any specific questions for one of the panelists, please don't hesitate to share. So I see my panelists joining. It's great to see all of you again. Welcome, bem-vindos. Good afternoon, boa tarde. So I think I'll ask each one of you to introduce yourselves. I think you can talk better about yourselves. And I'll start with Ben. Ben, if you can talk a little bit about you and Kamino. I think today's a very interesting panel because we have a startup, a VC, a bank, and a venture lender. So hopefully we can get a lot answered here today.
Thanks, Julia. Yeah, this is great group. And in terms of what Kamino is working with, definitely very relevant. So very quickly, Ben Gleason, I've been a fintech founder for the past 10 plus years, and founded Guiabolso, and now working with Kamino. So Kamino is basically trying to help startups and scale-ups to dramatically improve their lives and across the entire financial stack. So a lot of what we'll be talking about today has very much to do with some of the pains that we see the companies go through as they're growing, and then some of the solutions that are out there, whether they're solutions that we're creating with Kamino or solutions specifically for Brazil, as well as with this group here, also solutions that come from outside and that can be very complementary. So very excited to be here, and I think it's going to be a great discussion.
Great, thank you. Andy, can you introduce yourself and SVB?
Yeah, thanks, Julia. Good afternoon, everybody. I'm Andy Tsao, Managing Director at Silicon Valley Bank. I've been a veteran here at the bank, working on our international expansion for, close to 2 decades now. I want to thank Ben and Kamino for being one of the co-hosts and partners here. I've had the chance to work with Ben, at both Kamino and his prior company. We've been active in LATAM for 10 years now, and Silicon Valley Bank, as folks know from the nice advert. Thank you for playing that as the lead into the webinar. We're the bank for the innovation economy here in the U.S. and increasingly around the world. We've been active in Brazil and LATAM for a decade, and we're working with many of the leading venture-backed startups in terms of their needs here on our U.S. platform. And of course, it's great to see Julia, who used to be at SVB and a partner of ours at PFG, and great to meet Emmalyn.
Thank you, Andy. Emmalyn, can you please introduce yourself and Flourish?
Hi there. Thank you so much for having me. My name is Emmalyn Shaw. I'm the managing partner of Flourish Ventures. We are a $500+ million global early stage fintech fund focused on driving financial health, technology companies that are disruptive and reimagining financial services, both direct to consumer as well as infrastructure related businesses. Half our capital is deployed in the US and the other half is emerging markets, very much including LATAM, a very important part of our core work. While I run the US efforts, I oversee the fund, and I've been fortunate to work in venture for over 22 years and in tech for over 28, and have been very excited to see the evolution of both technology, financial services specifically, and how it's been truly transformational in markets, particularly in emerging markets as well. So look forward to being on the panel. Thanks so much for having me.
Thank you, Emmalyn. So I'm going to start with you. So Flourish, you just said you're focused on financial service and fintech startups. I think I would like to ask you two questions. One is, what are you seeing in terms of new fintech technology or fintech companies that you're excited about? And then to dig right into the panel, I would like to understand, when you are, especially on your LATAM investments, why is it important, or what do you look for in the structure of the company? Is it a Delaware, Cayman? Just dig a little bit on that sense. But first, I would love to see what you guys are seeing at Flourish that is exciting.
Yeah, look, I mean, I think that when I think about more broadly transformational financial services, I mean, Latin America at a high level is obviously incredibly well positioned, right? It's got the technology, I think, seems to be emerging and growing at rapid rates. COVID was a massive accelerant of that. And I think you're seeing just incredible top talent, as we've always seen in that market, but some really talented folks, both technically as well as business-wise, actively focused on core issues. I also think, you know, on the regulatory side of the house, it's just such an innovative regulatory body, and I think it works really well with financial services, and so it's lent itself to some pretty transformational technologies. I think as we think about what needs to happen, particularly as we look at some of these emerging markets, is this need to provide the plumbing and the services that are core and critical to really advancing the success of businesses at large. And I think, you know, Kamino is well positioned in that transformation. And we've made bets along a number of different dimensions. Banking as a service on the infrastructure side, trying to think through how do we provide rich services, financial services specifically to serve those businesses, to allow them to be very competitive, particularly in this global market. And we've spent a lot of time looking and making bets along that dimension, which is why we're so excited to be here in this conversation. I'm happy to double click on the jurisdiction side of the house if you want me to elaborate there as well. I think you're on mute, but I think you said yes, so I'm going to take that as a yes.
Yes.
What we're finding is, you know, look, I mean, and I know you've seen many discussions around this topic, so I won't belabor the point, but it goes without saying, when you think about the Delaware side of the house, right, there is a lot of standardized corporate law jurisprudence that particularly allows it to be very effective in launching and starting and governing a business. In particular as well, on the governance side, you're able to really to achieve and attract some top talent, particularly at the governance level, when you are operating within kind of a Delaware structure. On the Cayman side, there is a very strong tax benefit as well. And so we're finding there that you kind of avoid some of the double tax impacts there. So that's also very incredibly important. And then finally, it goes without saying that when you start to really explore some of these different structures, you are able to receive funding much more seamlessly than you would in a different context. And so I think in that regard, we've really pushed and recommended a lot of our companies to pursue those paths. And let's be clear, those are not always easy for startups. And so really having partners that can meaningfully help streamline that process and take out the pain and complexity of that is really important, particularly in these emerging markets and particularly in Latin America.
Yeah, no, absolutely. And if you even if you think about Latin America, and there are, I mean, 26 countries in Latin America, if you were to adapt to every single country and jurisdiction and how you talk to different laws, it would be a long learning curve. So I think it makes a lot of sense to have in Delaware. To continue on that. Oh, my internet's not great today. Am I back?
You're back.
Okay, I'm going to ask that, and then I'm going to switch my Wi-Fi really quickly. So, Andy, SVB has been working with Latin America and Brazil for 10 plus years. Ben was a client in a previous life and is a client now. So I'd love to hear your perspective on that structure, the structures. I know you're not a lawyer, but what you've seen over this 10 years and how SVB is helping startups when they're raising money from investors like Flourish that are outside of Brazil.
Yeah, I think Emmalyn really nailed it in terms of, kind of how does SVB get engaged with Latin American startups as a U.S. bank working from our U.S. platform? And so, there are kind of two basic ways. One is the one that's really intuitive, right? You're like Gympass, for example, started out as a Brazilian company, moved its headquarters to New York, became a global business. We can do their banking here in the U.S. as a U.S. bank. Less intuitive is exactly what Emmalyn described, which is if you're a Brazilian startup or a LATAM startup looking for international investment from the US or Europe or other international markets, that investment doesn't take place onshore because of everything that Emmalyn described, right? You want the right tax treatment. You want the right corporate governance in terms of in the rights that you're accustomed to as an investor. So it's not for everybody, as you said, Julia, but for those founders who are looking to raise international funding at the right time need to consider that sort of flip up that in LATAM typically requires a Cayman and a Delaware entity. And you're right, I'm not a lawyer. We see this very, very commonly across our platform. And obviously there are tax consequences to not only the business, but the founder. And you should also consider kind of who your ultimate exit is likely going to be if you're raising international funding and you have a dream of maybe listing on a U.S. stock exchange at some point or being acquired by a large international company. The offshore structure generally works pretty well. But on the other hand, if you get acquired locally by a local Brazilian company, at the time of exit, that actually can cause other issues. So in any event, something to carefully consider at the start, and agree with Emmalyn that good service providers or platforms that can make the process easier for founders is great. And I will also memorialize the fact that U.S. and Wales tied 1-1 in today's World Cup, so the U.S. is off to a good start.
Yeah, hopefully Brazil is off to a good start on Thursday too. Ben, so you founded Kamino recently, and you're trying to solve exactly that pain for most companies in. I'm not sure if it's just Brazil or LATAM, so I'd love to hear from you. And also, I see that you have a slide that you want to share about the problem that Kamino is solving, and so if you want to share that now and tell us a little bit more about that, would be great.
Awesome. Yeah, and just as a backstory on that, and when I met Andy and got into international VC, receiving international VC investments was in 2014 when we got a term sheet for Gibbs from Kazakh, and it said, okay, here's the offer, here's the money, and we we're like, awesome, this is amazing. We need the money because the money's running out. And then it's like, okay, but you just have to, create a company in Cayman and in Delaware and get a US bank account and do a whole host of other things before you can actually, get the money into your bank account. And then it was, a complete nightmare. And even the lawyers in Brazil, didn't really know, what was going on. SVB was very kind of new to also doing this cross-border thing. And so, I kind of had to figure it out, largely myself. And it was, extremely inefficient because I was trying to, launch a whole nother business. I wanted to focus on that. And then ended up spending a lot of time, on things which are just, basic kind of setup questions and starting your operations, which as a founder is super inefficient and honestly not a lot of fun. And so with Kamino, we're trying to take a lot of this stuff off of founders' plates. So everything from, setting up the corporate stack to, the financial piece that you need to receive the money. And then we'll also talk about, deploying the money. We help founders kind of across the board there because that was something which over, kind of 10 years at Gibbs also didn't really improve to the same degree that many other things in the ecosystem, did improve over the years. And Julia, I don't know if you can show this slide. I can run through that. Yeah. So just very quickly, and then I would love, obviously for Andy and for Em to jump in, but this was an attempt at, especially for founders who are either, thinking about raising money from international VCs or going through the process now, or who have just done it and now are thinking about, kind of do I have everything in place? Kind of on the first stack, what we're talking about here is having a Cayman holding company, which is where the founders will sit, the stock options will sit, and then also where the venture capital investors and perhaps in the future, the venture debt investors will come in. So that's the top level holding company. It's tax neutral. It goes through Delaware. It leverages, as Em said, a lot of the corporate governance at Delaware. So you can have very standard, safe investment contracts and very standard stock option contracts and things like that, because Cayman and Delaware end up having very similar governance. And then you'll have your Brazilian opco or your Mexican opco or whatever the case may be. So that's the typical structure that companies are needing to set up. So that was the first product that Kamino launched, just to get people started, day zero. But an additional challenge is, just having the structure itself isn't enough to actually get the money, because you need to receive the money into a bank account in the name of your Cayman company. And it turns out that many banks in the U.S. don't work with Cayman entities. And so SVB, here with Andy, is one of the, kind of short list of banks which, know how to work with companies which have this structure. They understand why it's happening. They know who the VCs are who are investing on top. So they're much more comfortable with, where the money's coming from and what it's being used for. And so having, this USD, bank accounts then flowing down to the Brazilian bank account, which is where you actually, conduct your operations. And to do that, you need to do an FX transaction. So an actual foreign exchange transaction, which is registered with the central bank. There's, a degree of bureaucracy around that to do it correctly. So it's another kind of friction for founders who are trying to get started. In the early days of Gibbs, also we did the first few FX transactions without knowing we even needed to register it, and then came up as an issue later on. And so it's good to know kind of off the bat that these are different pieces, and it's something that we're trying to handle seamlessly. And we work with SVB as partners, and so leveraging a lot of the documentation and the KYC which needs to be done to get that structure set up. So I would start with that, and then just say in terms of the use of proceeds. So once you actually get the money in and then want to start deploying it, one very important point is that at the corporate holding level, you're able to you kind of flow some expenses through that, typically things which are related to fundraising or related to your your corporate legal expenses, or to travel to the US for different events where you're talking to investors. So for example, you can get a credit card from Silicon Valley Bank to run those expenses out of your Cayman entity. However, you shouldn't be running operating expenses through your Cayman entity. And so that's the important distinction, where if you're paying SaaS services or marketing or salaries or anything like that, it should be run out of your Brazilian operating company and through Brazilian payment rails. And so that's kind of showing there that these are the kind of the two players which you would need in order to make sure you're running your expenses on the correct rails, both in terms of entities and in terms of currencies.
Yeah, just jump in there, if you don't mind, Julie, just because I think one thing that folks sometimes don't fully appreciate is the complexity of some of that front end in particular. I mean, certainly the back end is incredibly important, but even setting up, I think it can cost north of at least $35,000, if not more, to just set up some of these, the legal entity incorporation. And when it comes to, thinking about offshore accounts and building that, 6 months on average, if not more, I mean, it's really complex. And so being able to really streamline that with a partner like Kamino, I think is really transformational, because then it allows, and then obviously with folks in partnerships like SVB, in my mind as an investor, it really provides that peace of mind to be able to have just a really well-known, reputable platform with that breadth and depth to be able to kind of serve as that intermediary. And as you think then about being able to then go back and manage the business on a P&L basis and payment, et cetera, using the kind of the core local bank, I think that's really important as well. And that visibility as a venture investor is critical. And as we think about trade-offs that we make and companies that we look to invest, we look at some of these pieces, and they're actually really hard to do on their own. So to be able to have that visibility set up is quite helpful, and it allows them to scale and mature, as many of these businesses do over time, which is probably even more important, quite frankly, as they're well positioned to take on more capital and scale.
Yeah, and just adding to that, while we're talking about Brazil and LATAM, I'm sure Emmalyn would agree that you could apply this same conversation to a lot of different emerging markets, right? It's not just a LATAM phenomenon to have investors require this offshore structure. And so, when I came to Brazil 10 years ago, I had been previously working with the bank's cross-border China efforts, and all the offshore Chinese investors, which were U.S. investors, really, were requiring the same thing. And so, my point being that it's a familiar structure to the bank, because in many respects venture capital around the world works offshore for a lot of these new and emerging markets for all the familiar reasons why we addressed before, why investors want this kind of structure. So at SVB, we provide banking at the 2 offshore entities, both Cayman and Delaware. And as Ben described, that money, when your funding round is finally closed and ready to be dispersed, and you need that bank account, it goes into the Cayman entity, and then typically speaking, either a combination of the Cayman and Delaware. Most of our clients will hold their excess capital, so obviously. You as a founder will be needing the cash on shore to fund your typical operating burn, but a lot of it will the excess capital will kind of be parked at SVB at the offshore level, and then we can help you with things like foreign exchange when you need it onshore.
And I think that's just an interesting point comparing to the what U.S. founders go through, because U.S. founders is like, okay, first day you get your bank account, your credit card, you're only operating in dollars. It's not something that you need to worry about. So like there's a whole host of things here, which in addition to it being very hard to build a business in emerging markets and in LATAM, also the structuring piece can be really a headache, and there's not a lot of upside, because you can either do it right or not do it right. So it's mostly downside, and so. That is a key question that a lot of founders don't want to deal with. And so if they can find, trusted partners kind of, that they can pass that off to, it's much more efficient than ever in trying to figure this out on their own. And so that's like ultimately what we're trying to solve for in a lot of ways. And, even kind of what Andy alluded to indirectly, you're thinking about currency risk then, and, do you leave your money in dollars or do you bring it down to local currency? So there's a whole host of things there that, people are not necessarily used to needing to deal with. And so it helps to have kind of partners that you can talk to and say, you have 100 other customers, in the same situation. What are they doing? So really leveraging, partners in the network is super important.
Yeah, absolutely. So I think building up on that, Ben, I would like to ask Em. So 2020 has been a challenging year so far for startups. We're seeing layoffs, we are seeing valuations changing, and equity is a lot more expensive. So what are you, I'm hearing this background noise. So Em, I would like to understand, what are you talking to your current portfolio? What are you advising them in terms of financial tools that they can help, or any advice that you're having? And also for the new deals, what are you looking for in this uncertain times, sorry.
Yeah, no, absolutely happy to help. I think that as it relates to our core companies, I think it's really around execution. It's really around thinking differently. There's been, as you know, we're coming off of a euphoric amount of capital funding into fintech, as well as a real pressure and expectation around growth. And I think it's really important, and it's certainly not growth at all costs, but there was more of an emphasis, quite frankly, and a premium placed on growth. And we're reverting back, and I've been investing now through at least 3 cycles, so I've seen the benefit of this. This is not a new movie, and this is often the case where now we really need to focus on and revisit the fundamentals and make sure we're looking at unit economics, and we're thinking very, very, and we always have, but this is first and foremost the metric that matters, right? And thinking through, how do you conserve cash, and what are the ways in which we're really thoughtful about deployment, and all the technologies, quite frankly, that fundamentally allow us to manage cash better, and are thinking through those trade-offs that you're making as an entrepreneur, as a startup, as you're scaling. For some of our larger companies, it's a real opportunity, right? As you've heard many times, some of the best companies emerge during downturns, as they do. And part of what they do is they focus even more. They're more maniacally focused. They don't take on 5 initiatives, they take on 2 of the core initiatives, and they double down, and they might even look at potential acquisitions, because unfortunately in this market, a lot happens, right? A lot of exits happen, and a lot of companies that may not have that funding or sustainability, but they're very ripe, and they've got great technology or great assets that would be very additive to another platform. And so we always ask them to think strategically around where those opportunities exist. And then it's around finding talent. There's also a dearth of amazing talent right now, particularly as things are moving. And so really taking advantage of where that talent might exist and how we might be able to attract that. And on the new company side, it's really around, are you thinking strategically around how best to go to market? So, again, going to kind of a Kamino-like structure and a service, those are great services that allow these businesses to come to market in a thoughtful way that structures them, that minimizes risk, certainly conserves cash, allows them to partner with reliable partners, and position them to actually get subsequent funding. And right now, in particular with emerging markets, it's still the case that a lot of the developed venture markets are where most of the capital is coming from. A lot of the kind of more emerging local markets, VCs have gone quiet, or less active vis-a-vis what we've seen in the past. And certainly among the later stage funds, that has gone very much dormant. And so really thinking through being strategic in where they invest. And we're continuing to look at teams. At the end of the day, it's about teams, it's about differentiation, it's about positioning themselves in a high growth market where we think has real viability. And so we continue to make those bets. We're very active in the market. It sounds like, we're back to pre-COVID levels in LATAM. And that's not necessarily bad. I think there's a flight to quality that's going to happen. This happens with every market correction. And so those companies that are really continue to execute through this downturn are going to begin to get a lot more interest. And you're going to still see quite euphoric funding going into those platforms. And we've certainly seen that ourselves.
Yeah, so I don't know if you've heard or the founder of Endeavor, Linda. She says, when economies turn down, entrepreneurs turn up. So I think it is the case where, like we saw in 2012, Nubank and all these companies that are now unicorns started when there was a downturn. So it's really interesting how resilient entrepreneurs are.
Indeed.
Andy, I think you were mentioning earlier that you're getting a lot of questions from entrepreneurs about 3 main topics. Now, the FX, which Ben and Em alluded to, the interest rate, how to manage their cash, and also venture debt, especially in LATAM, which was a product that wasn't very widely available like in the US. So can you talk a little bit about that?
Yeah, 100%. So, Emmalyn set these comments up perfectly, because you look at almost across the board, whether it's U.S. or LATAM, or my team also covers India, Australia, Middle East, and around the world. You saw this phenomenon of last year being the very top of the market, and now sort of Q3 to Q2, just about everywhere has fell to pre-pandemic levels of about kind of 50% of where Q2 was. So obviously equity is a lot harder to obtain right now in a risk-off environment with all the various different, there's just so many variables of uncertainty right now. And so investors have very much slowed their deployment of capital. So to your point, Julia, the last we were in Sao Paulo in September. I just got back from Australia, New Zealand. We were in Mexico, in August, and we made the rounds with our clients, and very much so, every client had those three topics very top of mind. So, in a more capital constrained environment, companies are thinking, how can I extend my cash runway as long as possible? And this just gives me more degrees of freedom in terms of when I need to fundraise again. And as Emmalyn alluded to, companies that raised last year, I think valuations are going to be in question now, given top of market, and then to where we are today. And you just look at the public markets, that's all you really need to know. And so outside of FX, which the dollar is just crazy strong against the real and other currencies around the world, you also have, hey, I've got excess cash at the bank. Now, whether it's the CFO saying, hey, my boss or the board is saying, get the best possible rate that you can get from on that money, because on several $1 million of excess cash, that can translate into a couple of FTE potentially, right? So it really is meaningful. And so deposit yield is top of mind. Fortunately, at SVB, we have a really nice program for Kamino stage founders, which are typically very early stage. We have what we call our startup banking account, which basically no fees over 3 years' time. We have a promotional deposit yield that's amongst the best offered with U.S. banks, and so that's a very appealing product to be able to get good deposit yield on your excess balances. The second topic, as you suggest, Julia, is venture debt. How do I extend cash runway? How do I get additional financing to help fund growth, to hit some key milestones? And it's great to be able to partner with our friends at Partners for Growth and the Inter-American Development Bank for the fund that we launched back 2 years ago now. It's hard to believe, but I think you'd be the right person to ask how busy you are in terms of obtaining requests for venture debt. I can say we certainly talked about it in our earnings release a couple of weeks ago, that we are at record backlog across our platform for venture debt requests. And a year ago, when there was so much equity being deployed, it's hard to get above the noise. People were just more keen to take equity at good valuations. But obviously, this year, venture debt is going to be a lot more attractive in terms of a way to finance your business. It's not for everybody, and we can talk about that more later. But here in the U.S., last year about $33 billion of venture debt was deployed. Through Q3, we're about $23 billion. In LATAM, Lavica's reporting through September, $1 billion of venture debt has been deployed. I think that includes some of the warehouse financing lines, but it's certainly a category of financing that's growing and more available for founders to finance their business, and something to consider in times where equity is more difficult to obtain.
Thanks, Andy. Yeah, Ben, go ahead.
Yeah, I would just kind of carry on the theme of Andy mentioned the World Cup. playing offense and playing defense, right? It's like, if times are really good like before and capital is cheap and plentiful, and you have, five priorities that you think you can invest in and get an interesting return on, that's where usually most of the team is going to be focusing, right? And then as things have shifted this year and people are cutting back on, going from 5 projects to 2, main projects, the flip side of that is, okay, we need to play, better defense. And so, then it's actually worth the time and worth the resources within the company to look at, how do we get better yields on our deposits, whether it's in the US or locally in Brazil? How do we, get better spreads on the FX? But then also as, people have deployed capital over time, especially as they were growing extremely quickly last year. One of the things that, we always talk Gilbolso as well, every time, there was kind of this crisis, and it's like, okay, tighten your belt, look at your expenses. Every time you see that within, for example, all the SaaS services you've contracted over the years, it's like, okay, we have 40 licenses, we're only using 20. We have a service here that somebody, got, and then they left the company. Nobody's actually using this. And so it's also a good time, to kind of actually, go through your financials and really think about, are the expenses making sense? How can we, spend better and spend smarter? And so I think, naturally, there's always an ebb and flow. Usually startups are not super disciplined to do this every day, but there are more and more tools and partners and infrastructure out there which helps companies to manage this kind of on a more regular basis. And that's one of the things also that the Kamino has focused a lot on, is how do we kind of, beyond the pure setup side, once you're actually doing your operations, how do we take some of the kind of not so sexy or fun piece of just like having financial operational efficiency, managing your SaaS payments, making sure that your credit card payments are actually working the way that you intend, because in LATAM, that's often not as, you can't take it as much for granted as in the US. And so just, making financial tools which actually work for startups that are growing quickly and can't afford to have, things going offline or have payments decline. These become more important as we're kind of in this more defensive environment as well.
And I don't know about you, Andy, but I would say as a venture capitalist, as we look at companies that have invested in those types of solutions, it actually provides a lot more visibility. We start to see folks really being more financially disciplined with using platforms, watching decisions and trade-offs they've made. They definitely are going to have a much higher probability of actually getting funding, either venture or debt or equity. And I know certainly my companies that have sought venture debt, there's a very strong assessment and evaluation that they put, as they should, to see whether they're worthy of such additional funds. And I think these are the types of solutions that are pretty critical. When I think about LATAM in particular, there are desperate point solutions, but there's nothing that really holistically brings them together to allow for a really robust platform. And I think that visibility is really critical.
It's a great point, Emmalyn. I think there's probably some on the webinar today that are thinking, I really can't get any more equity. My existing investors have kind of told me there's no more available for them, no more reserves, and they're thinking, hey, maybe I can go out and borrow some money. And I think to my point before about venture debt not being the right tool for everybody. I think where it works best, if you think of it from a, as you were describing, Emmalyn, sort of a collaborative scenario where investors are still pretty excited about the company, but they'd really love a financing partner to come in and work collaboratively side by side in financing the business to help it go forward. And I think those are the situations, to your point, where I think it's a real win-win scenario. If you think of a venture capital portfolio, so the top of the portfolio where you got all your stars, you probably don't have to worry a whole lot about them getting financing one way or the other. The bottom, which I first described, where they're probably not going to make it, that's not the right place to put debt into either. But it's sort of that that nice middle of the portfolio that there's still a lot of opportunity and growth, and that's where sort of the combination of both equity and debt is such a great can be a really vibrant combination.
Yeah, I want to add to that. Absolutely, there is venture debt is not by any means a substitute to equity. I think it's a complement. And there are startups that are maybe too early to get venture debt. because differently from venture capital, you're gonna have to pay the venture debt money back. Although we do get some equity upside, it's the dilution is minimum, but it's not. So a lot of founders can come to us. Oh, now that valuations are not as good for us, let's just get venture debt. That's not the solution. So I think it's a complement if you're trying to grow, if you're trying to get to maybe a better position for a Series B. But we also put covenants, and we don't have board seats like VCs do, but we follow the companies very closely every month, so we know what's going on in the company. We sometimes talk to the VCs too. So it's a great product, but it has to be used at certain growth stages, not any stage for a startup. And Ben, are you seeing anything on the Kamino portfolio platform? I'm sorry, that the startups are asking for more or using more, especially now with this uncertain times and markets?
Yeah, and I think, just in general, many founders, especially first-time founders, just don't necessarily have the network yet. They haven't been down the path, and so a lot of things, even beyond kind of like the basic, if they're trying to do the corporate setup in Cayman, for example, they're still, saying, well, but how much dilution should I be expecting on a seed round, or how do I think about stock options? I've never worked with this before, and so I think there's a whole host of things which are, now that things aren't just kind of term sheets being handed out, and now that dilution and valuations are under more pressure, that they're starting to worry about. So I think there's, on the financing side, definitely, founders are looking for, people have gone down the path. I recently had a conversation with probably one of the first founders who got venture debt in LATAM, right? And it's something that, we just don't see that much. And so, even I'm not like as familiar as was on the equity side. So it is super helpful to have, somebody that you can go to and kind of get advice even beyond whatever their core product is that they might be working with you about. And then, as we've been, Kamino has been working increasingly with scale-ups, we start to get a lot more questions on, how can I kind of make my budgeting versus actuals process better? How do I improve my my reporting to my investors? And a lot of that is, that's kind of the insights that are coming out of the data stack. And if your data is not organized and your kind of operations are spread across multiple systems, it becomes very hard to kind of get the insights you need for the business. And then as your investors, especially as the market turned down, we started hearing from our investors a lot more saying, how's it going? How does runway look? All of that kind of stuff. And obviously, if you're taking debt, then it's even more important to have a super tight control around the numbers and what you're building and what you're learning as you go. And so I think those are also things that we're still building a lot of pieces in the stack at Kamino, but we're thinking a lot about how do we also support founders as they're on this journey of they want to build their business in a smart way. They want to understand the return on the different investments that they're making. They're talking to investors all the time. How do we help them to have a good dialogue around that? And as Em said, the kind of dream for Kamino is that if a company's working with Kamino, the VC or the venture debt partner can be very comfortable because they know that they're backed up by a very solid platform with very kind of by the book structures and consistent numbers. So ultimately that's what we're looking to as we ally with the founders and the CFOs of these companies.
Maybe just more like a general question for a founder that's starting now and trying to get ready for the first fundraise or maybe like a seed round. How should they think about choosing a VC?
Should we guess?
Yeah. I asked your founders to think about VCs.
Yes. Look, I mean, I think, did we get that, Julia? Or I'll let you finish the question. Sorry.
Yeah. What points should they consider when choosing a VC, and how to evaluate dilution? And yeah,
I think when it comes to venture partners, it's very much it's a long time relationship. It's like a marriage in a lot of ways. And so I think really making sure that there is like a natural connection, there's a mutual sense of respect and ability to really work together. I think early on, particularly among seed entrepreneurs, they're going through, even if they're a seasoned entrepreneur, they're going through a number of ebbs and flows, and that ability to have a thought partner as they're going through that, and ideally a platform, if that firm has a platform of other providers around, marketing and HR and PR, et cetera, legal, where they can lean on as they're kind of asking various questions, I think is really critical. But at the end of the day, it starts with a relationship. And I think it's really important that they have that shared understanding. And there's no one firm that has a certain reputation. At the end of the day, it's the individual. And so I think, and then obviously, beyond that, is there an expertise that they bring to bear? What are the things that they really want coming out of their investor syndicate? How does this investor deliver against that? I think is really critical. And how can they help for subsequent rounds of financing? Are they well positioned? Are they sufficiently networked and able to help? And to the extent that there is, either enterprise level business model vis-a-vis customer direct to consumer models, are they seasoned in that? Are they seasoned in those models? Do they have introductions on the enterprise side if that's their model? Like those are obviously really critical as part of the evaluation. But I would go back and say that connection, that personal dynamic is very critical. And I would test for that first and foremost. Unfortunately, there's a lot of ways for both sides to test each other out, right? Talk to the other entrepreneurs for whom they've worked with this investor. And just like they do with entrepreneurs, due diligence goes both ways, and I would highly encourage it.
Yeah, so you do spend time in person now that we can, and talking to the companies you're going to sit on the board and getting to meet them. So it's important that there is a connection between the founder and the partner, right?
Yes, and I think on the dilution side, I think the market's very, I think running a thorough process, feeling like you've really thought through what is the valuation that's appropriate given the stage of the business, how much to take on at any one point based on likely valuations, I think is important as well. We're reverting back into the kind of pre-COVID levels as we should, and I think there's a much more sanity around what's the amount of capital that one should take as a seed or a Series A. What are some of my milestones? Because I think at the end of the day, it's really milestone based. One should never take more capital than they need to achieve various milestones that can then accrete value for the business. And I think every business is somewhat different in that regard. And so really being thoughtful around what are you trying to accomplish? How much capital do you really need? And against that, finding the right partner to deliver that, or partners possibly to deliver against that. It's really important.
There's one question here. And I'll have anybody answer that, but are there any mistakes that are more common among Brazilian founders during fundraising? How would you advise?
Yeah,
So
I do a lot of mentoring on this topic. Yeah, I mean, I think there's probably three things that I would highlight. So one is, as the market was hot and people felt like, okay, I want to go out and be an entrepreneur. Many times people wouldn't have this kind of the story very well worked out. They wouldn't have, kind of tested, this with other entrepreneurs, with people that understand the market ahead of time. And so it's, they just were missing pieces kind of that investors expect to see and that you should have anyway to build a business. And so I think, that the most basic point is just like take a very standard pitch deck and make sure that you are really solid on all of those things that companies or that VCs will be looking for around the team and the TAM and everything else. That's pretty basic. I think there's a piece in Brazil, kind of traditionally, especially 10 years ago, where oftentimes people were getting money from local angel investors here, and the angel investors would be like, "Okay, I'll give you 50,000 reais for 30% of your company," and so you were seeing these like very, very bad cap tables, which are it's almost impossible to get out of for the founders. And so one thing to be super careful of and thoughtful of is how do you build your cap table? Who are the investors who are coming in? What are they asking for? Are they giving you the value in exchange for what they're looking for in terms of equity? And unfortunately, there are still some kind of old school investors which maybe are not that helpful over time in terms of what they're asking for. So being very careful on who you're bringing into your cap table. as Em said, it's a very long game. And then, the last piece, which we've talked a little bit about, is just how are you setting up the company? And so if you set up the company initially taking, investment directly into your Brazilian company, you're giving stock options directly to your employees here in Brazil. And then, on our next round, you want to flip it up, it can become, much more expensive and complex to do that. And oftentimes, it's not worth it. It's better just to, set up the structure right from kind of day one. So depending on the business, kind of, making sure that they're thinking about, it's not a one-shot game. Is if you want to do multiple stages of financing, making sure you're building towards that in terms of your cap table and your structure.
Maybe one other comment, which I think is more broadly applied, which is really, and I alluded to it in my prior comment, but it's really around valuation. I think, again, as you think about optimizing, particularly the earliest stages, it's really being disciplined around how much capital do you really need to execute against a plan to realize greater value. And I think against that, people can fall in love with maybe larger valuations at the expense of maybe doing the right type of homework is this the right partner? Is this partner patient capital? What are their objectives? How are they well suited to support the business down the road? And I think these are really critical questions that you have to ask yourself. And it might be the answer that choosing that partner who has the highest valuation is, but it's not always the answer. And I think really doing your homework as to not falling in love with that, because I understand dilution for sure. Everyone's very mindful of it. As a CEO, particularly the earliest stages, the nice thing is as a company continues to execute, boards are always issuing more performance-based grants, particularly for the large, the founders and whatnot, because they recognize that dilution's being impacted over time. And so they want to continue to incent and make sure that these founders have all the right incentives in place. And so there are mechanisms to continue to make sure that these entrepreneurs are very much engaged and incentivized. And I think, so just really thinking through finding that right partner, not always falling in love with maybe the number per se.
Yeah, I think from my view, and sort of this might be a little bit, biased with some conversations I've had with investors recently, but and maybe I'm a little bit guilty of the same phenomenon, which is to say that, hey, mentally, you've got to really get over the fact that last year's done, right? We're in a new paradigm today from where we were. Valuations, deal terms, all that has changed pretty significantly in this market. And just to give you an example of that, we did a recent study. It's on our website, svb.com, if you're interested in some of the insights that we produce. But looking at SaaS businesses, for example, where last year you had multiples of ARR that were 20, 25. You heard close to 50x in the hottest of deals, right? Which is pretty insane when you think about it. And where we are today in terms of, this is sort of Q3 data, we're seeing averages sort of being somewhere between 10 to 15 times ARR. So probably, again, much closer as M puts it, sort of pre-pandemic levels. And so getting your mind around the new reality in terms of what it's going to take to raise funding and thinking of dilution in kind of that new paradigm is going to be an important one. And I would say all the things that Ben and Em said about doing your due diligence as you look at international investors in this kind of risk-off environment, I think while we had a lot of new investors express a lot of interest in LATAM in the last couple of years, I think it's also safe to say that the bar is going to be much higher now as well. And look at those firms that continue to be committed and are continuing to invest actively in the region are always good places to start.
Awesome. Thank you. So we have 3 minutes to go. I think I just wanted to thank Ben and Andy, especially Ben and Silicon Valley Bank, for sponsoring the webinar, organizing, inviting us. But any last words for entrepreneurs that are starting their journey, that may be watching us and are trying to get
That's the trick. It's at the end of all the questions, we have to ad libs from there. No, I mean, from my side, thank you so much for participating. And as we've mentioned, Silicon Valley Bank has been a longtime partner for us, a great partner for Kamino, Flourish, and M, known them for a long time, and they're also great investors for for us and for other companies. And Kamino is basically super early. We're about a year in from when we started to really talk about the idea to what we're building, now, and we have a lot to go. So, a lot's coming, and we're here to help, entrepreneurs and CFOs on the journey. So definitely reach out if we can help. And we look forward to meeting a lot of people that were participating today. And thanks for Julia for moderating. This was great.
Yes, thank you very much. Go ahead, Andy.
I was going to say, please go on. Why don't you go on? I can wrap up.
I wanted to say that one thing I've really been so impressed by about just the Latin American entrepreneurial ecosystem is how supportive they have been, and how they've really been there to kind of provide guidance. And I think it's such an important part of advancing entrepreneurism, is to have that level of support and that community and network. And so just to both applaud, but also continue to encourage, and to the extent that, global funds like ourselves and others that can help even further that outreach to the broader network of financial entrepreneurs, happy to be involved. But I just have been really impressed by just how supportive they've been, and how much that's really advanced the innovation that we've seen in the market. Yeah,
that's a great point. It reminds me of we're at the LAFCA conference last month, and speaking of how resilient Latin American founders are, Nico Sakazi from Kazakh said, "Hey, American founders eat cereal for breakfast, but Latin founders eat crisis for breakfast." And in sort of the decade that I've been involved with LATAM, I've seen, in that short period of time, I won't go through the litany, but you just go back 2 years ago and we had the start of COVID, and look what transpired over the couple of years. So, I have a lot of confidence in the region and how founders are going to react to it. And while we've been talking a lot of, sort of doom and gloom, if you will, in this current environment, we continue to see good early stage activity at the bank. It's not quite where it was last year, but it's still pretty solid, meaning pre-Series A. And so, and I could say for sure for those founders that are coming through Kamino, they come very well prepared to work with us at SVB. I see, Ben's definitely, sort of polished up what he learned working with us at Guiaboso, and I think it's going to pay off for Kamino founders as they interact with the bank. And despite the decreases of funding across levels across the board, I think it's also going to be true for just about every region, including LATAM, that this year will end up being the second biggest year in terms of dollars invested in the region. So it's a lot more mature, a lot bigger than it's ever been, and I think all of us around the table, I'm sure, are very optimistic about the medium term and long term future of innovation in LATAM and around the world.
For sure, we are. So with this happy thoughts, I think I'll let you go, and thank you so much, Ben, Em, and Andy, and I hope to see you guys soon.
Thank you so much.
Julia.
Thank you.
Thanks, everybody. Ciao.
Ciao.